China is a major subject at the Asian Financial Forum 2011, and so it's fortunate there is a China specialist in Jing Ulrich of JP Morgan. Jing, thanks indeed for joining us. And the theme this year is Asia, reshaping the global agenda. But to what extent is that true, would you say?
Well, the Asian region's growth rates in the last couple of years have been very strong. In fact, they've exceeded global growth rates by a long margin. And that's really helped by tremendous growth rates coming from China, India, as well as countries such as Indonesia and other countries. Now, in addition to that, it's not just the growth rates that matter, it is also the structural change that's taking place in the entire Asian region. And that structural change is basically the shift away from dependence on exports, on external demand, to more of a focus on Asia's domestic growth. And China is a very good prime example of that.
But really looking at China's growth, in 2010 it was something like 9%, in 2011 people said maybe 11%. But what's your view?
Well, in 2010, growth rates probably reached 10%. In 2011, we're expecting China's growth rate to slightly decelerate to around 9%. But by any measure, China's growth will remain very robust in the coming year or two. It's beginning to work. Inflation remains one of the main challenges facing the Chinese economy in the coming few months. Inflation comes from several sources. One is food prices. In the recent months, we're seeing agricultural commodity prices rise at a very rapid rate. Another source of inflation is basically imported, mainly coming from raw material prices. China is the largest importer of raw materials, from oil to iron ore to coking coal. These raw material prices have been rising very rapidly as well, contributing to domestic inflation. And the third source of inflation is basically wages. In the last year, minimum wages have gone up by about 23%, contributing to CPI. So in the coming few months, one of the main focuses for the Chinese government is to contain inflation and achieve a more sustainable growth rate for the economy.
But saying the Chinese government is going to take decisive action, does that suggest that there's going to be a hard landing for the Chinese economy?
Well, we don't anticipate a hard landing. As a matter of fact, we think the Chinese economic growth will remain quite strong in the coming year or two. That is because the Chinese authorities have fine-tuned their policy. To tackle inflation, the government is using a combination of measures. Number one, they're using monetary tools. They've lifted the reserve requirement ratio 6 times already in 2010. They raised the interest rates twice in 2010. In the coming year, we're expecting 3 increases in interest rates, probably 3 increases in the reserve requirement. So that's monetary policy. The Chinese authorities are going to let the RMB appreciate at a slightly more rapid pace, meaning around 5% in 2011. In 2010, the RMB appreciated about 3% against the US dollar. That's pretty much lagging behind a lot of the Asian neighbors. So in 2011, 2012, in each of the next 2 years, we're expecting the RMB to appreciate by about 5%. So therefore, this will also help contain imported inflation.
You're chairing a panel that looks at opportunities in natural resources, and particularly with reference to hedging against currency uncertainties. But how do you see all that going forward?
Well, in the natural resources arena, we're anticipating very strong demand coming from the emerging countries, including China, also a recovery in demand from the developed world. So if you look at the 3 buckets of natural resources or commodities, i.e. agriculture, metals, and energy, we're expecting pretty strong demand across the board in 2011.
And are there really investment-friendly opportunities that you do see ahead there?
Well, in the commodities area, energy clearly is the most liquid market. Oil is widely traded on many exchanges, and that's probably quite easy for investors to get exposure to. In addition to that, metals are quite easy to get exposure to as well. You can buy metals on the various commodity exchanges. You can also buy companies that are involved in the metals business. Agriculture is slightly more tricky. we expect a pretty strong demand across the board from Asia, from emerging countries, because the diet in these countries is changing quite rapidly as the population is beginning to consume more protein, and that's triggering a lot more demand for things like soybeans, for palm oil, and corn. But it's more difficult for investors to actually purchase agricultural commodities because you need professional help. For retail investors, I think it's slightly trickier to get exposure to the agricultural commodities market.
And turning specifically to Hong Kong, there are the RMB instruments that look as if they're investment grade. Are you interested in those?
It is very important. Hong Kong has been a major beneficiary of the rise of China for the past many years, and Hong Kong has been able to reinvent itself many times in the past couple of decades. It is clearly a major financial center that is really at the center of China's financial reform. Now, looking at the RMB opportunity, we think in this coming year, there will be a lot more RMB deposits in Hong Kong. Right now, total RMB deposits in Hong Kong already, I think, approach some 300 billion RMB, and that is rising very rapidly every day, every week. In addition to that, we're seeing a lot more RMB bonds being issued in Hong Kong by both Chinese banks, Chinese financial institutions, as well as international companies. So as the deposits in Hong Kong in RMB grow, there should be more RMB denominated assets for investors to buy into.
You quote 300 billion RMB this year. But will it be double that next year?
It could happen because a lot of companies now can set up RMB accounts in Hong Kong without restriction. They can actually buy and sell RMB without restriction. And plus, you have a lot of demand from retail investors in Hong Kong as well. RMB deposits are going to rise quite rapidly. But importantly, we need to have more RMB denominated assets for investors and corporations to purchase.
And Jing, you are attending the Asian Financial Forum this year, as you have done in the last 2 years. How do you see the forum having developed?
Well, I really enjoy attending the Asia Financial Forum. I've spoken at the event in each of the last 3 years. I think this year's event is going to be the best one yet. Clearly, the agenda, as you can see, is going from strength to strength. There are many international speakers, also speakers from China, from Hong Kong, from Asia, and there's some 1,700 delegates I hear. And I think it's a great time for international Chinese Hong Kong delegates to get together and discuss issues of common concern. Especially the timing is perfect. We're at the start of the new year, we're also at the start of a new decade, and we're also at the start of the 12th five-year plan for China.
All right.